All right, hello everybody. We are joined today by the co-founders of Fiat Spot and Futures Exchange, BTSE. It's BTSE, but you're supposed to say BTSE. The co-founders Jonathan Leong and Brian Wong are here to discuss the structure of the exchange, the products offered, the different features, and their upcoming token offering on the Liquid network. Thanks for joining us, John and Brian. How are you guys doing?
Hey, Swapman. Thanks for having us. Good to be here. We're doing good.
Great. So
Nice to be here.
thanks. Okay, so what we'll do is we'll run through a bunch of questions, just us, and then we'll open it up to some of the respected members of the community to ask their own questions. Okay, let's start with some general background stuff. Can you tell us a bit about the company structure, where you guys are based, and the headcount when you were founded, and the backgrounds of the key members?
Sure, I'll start off with some of my background. I started out about 15 years ago, mainly focused on building trading platforms for the gaming and finance industries. My expertise over the past 15 years has been building systems that scale up to hundreds of thousands of concurrent users and being able to deal with high volume transaction flow. In the past 7 years, I've been focused more on venture building and been building up ecosystems, primarily focused on fintech. Joshua, our COO, he has solid management experiences from his MNC days. He used to be GM at IBM Global Services and MD at Cisco Systems Singapore. Brian, how about you?
So I started my career about 10 years ago, and then I spent the past 10 years also building trading systems, strategies, and also models. So a lot of what I used to do would entail building, let's say, spread or market making trading systems that would be co-located at various exchanges around the world. I did that for about 10 years, and then I started BTSE with Jonathan and a couple other co-founders 2 years ago.
Okay, so you guys got started up 2 years ago. So what's your current headcount, and where do you guys have offices located? Where are your team members working from generally?
All right, so we're currently incorporated in the BVI. We just completed a move from Dubai. We currently have offices out of Taiwan, Philippines, and Malaysia. Total team size is about 50.
Okay, so let's talk about this move from Dubai to BVI. I mean, what exactly happened there? Because I guess the first question is why did you choose Dubai in the first place? And then the second question would be what exactly went wrong there? Apparently the Dubai authorities said that it wasn't valid for you to operate in their jurisdiction. There's a lot of other kind of talk about how it was not properly set up. What exactly went wrong there, and why choose BVI and why choose Dubai in the first place?
Yeah, good question. So we let me give you some background. In the bull run of 2017, we saw that most of the platforms out there were suffering from the ability to operate at full capacity and be able to onboard regular retail folk. So having the right fiat channels was very important to us. And we did speak with a few consulting firms, and it came back that Dubai they proposed was actually one of the most suitable options in the beginning. So we were advised that Dubai was building up a regulatory framework back then, and the current offering would suffice until proper regulations came to pass. The main point is that Bitcoin is not really regulated as of now out of the UAE. So regulations in that basically takes time to get implemented. So a part of this was not entirely clear in the beginning. So as it turned out, we realized that it was not for our longer term goals. It was not really suitable, and the regulations that we were looking for never came to pass. So as a result, we decided to move to BVI, as the BVI has been seen to be very welcoming to cryptocurrency businesses in the past few years.
Okay, has that impacted any of your banking relationships or anything like that?
Actually, no. So banking is not limited right now to just the UAE. We have a couple other bank accounts or banking facilities across the world.
Okay, and so what are the current KYC requirements and restrictions related to that?
Basically, there are no KYC requirements currently for crypto to crypto trading. We do require KYC for access for fiat deposits and withdrawals. The KYC required would be government ID and proof of address.
And what restrictions do you have on users' jurisdiction, where they are based geographically? Who can sign up, who's not allowed to sign up, etc.?
At this time, we do not serve US residents as well as people coming from sanctioned countries.
Okay, let's talk a bit about the tech stack that you guys are running. You mentioned before that you've built systems that can handle hundreds of thousands of concurrent users and lots of flow. A lot of users here have been frustrated by BitMEX's performance, for example, where orders get rejected all the time and there's a lot of load problems there. Some people also have problems with Deribit on that side of things. Could you describe what tech stack you're using to run the engine and whether you're using microservices and other sort of ways to ensure that we don't experience the sort of issues we've had with other exchanges?
Yeah, so most of our major core components are actually built off of Java. A lot of components were actually built from scratch. So we took a very different approach rather than using open source solutions out there. It ended up with us creating our own message queue, order routing nodes, matching engine, and also data replication and cluster management. So the result of that is basically we were able to achieve very efficient performance with this design. We implemented a master-slave design that basically allows for failovers and hot upgrades on the core engine that would only suffer 100 milliseconds to failover. Each cluster is also designed to run an individual market, so that really allows for scaling across multiple markets if needed. And most importantly, what's different is that the way the engine is designed is in a very efficient way of how the data structures are implemented. The main key feature to this is that, yes, everything's in memory. We are able to have easy access to references. And then that basically allows us to access key components very quickly. A typical approach would be someone using an RDBMS to do a matching engine, let's say basing it off MySQL, for example. But using such a generic out-of-box software, it was never built to perform and act as a matching engine. So that introduces a lot of inefficiencies in there. And also then, of course, you then suffer from network transmissions that you have to keep sending data and messages back and forth. So customization of this and all the major components allow us to then devise a way for our own proprietary mechanisms to ensure data consistency and high fault tolerance.
Okay, that sounds good. Can you give us some specific benchmarks to indicate how many orders you can process and how fast you can margin or anything like that?
So what people generally measure is transactions per second, but for us, we feel that that isn't an accurate measure. What's more important is actually the amount of order requests that you're able to handle. So we measure hours from the time it hits the order routing nodes. It gets processed by the engine. It goes through risk management calculations and does whatever it needs to do, and it gets returned. We are able to do at least 1 million order requests per second.
So can you say that again? It's just 1 million orders per second?
1 million order requests per second.
Order
So you would
requests,
assume,
yeah.
yes, you would assume that one order might not transact with another order, but one order could transact with 1,000 orders.
Right. Okay. And where are the servers located? And do you use a cloud provider to run them?
Majority of our servers are based out of Taiwan. We are fully self-hosted. It gives us the flexibility to customize our hardware and also have full control of our internal network architecture. So no cloud providers, and we actually also offer co-location services.
And how about connectivity with third-party trading software? There's a lot of guys here that use software like CCTX and others. Can you tell us a bit about the support you have from third-party software providers?
So we recently just finalized a latest version of our API, and it's just been launched. So it's something that we're currently building up more support in that area. We're also on the lookout for more devs to actually help build up these third-party libraries.
So you have API-wise, you have REST, WebSocket, and Fix.
We do not support Fix at the moment. We support REST and WebSockets.
Okay, yeah, Fix would be good because a lot of these third parties they just use the Fix standard. So
Yes. We've been also told quite a bit, and that's something also we have in the pipeline.
all right, let's talk about how the assets of customers are stored and the custody models you guys are using. Crypto-wise, what is your model for how you're storing client funds? Are you using cold storage and a hot wallet? What are you currently doing there for crypto?
For crypto, right now, all our client funds go directly to a multi-sig cold wallet, and funds are only transferred as needed to the hot wallet.
What percentage of the funds are at any time stored in cold?
99%.
And what's the impact there of how quickly users are able to withdraw their crypto? So if you have 99% stored in cold and someone wants to pull out 100 BTC or 500 BTC, how quick are you guys to fill up the the hot wallet in order to provide this withdrawal?
So basically, we refill the hot wallets as necessary. It's a bit more of a tedious process, but this ensures a high level of security that's required. So generally, base our withdrawals are usually instant unless account is flagged for manual review. But occasionally, time to time, if there is insufficient funds in the hot wallet, then a bit of time might be required for funds to be transferred from cold.
So how many team members have access to the cold wallet in order to do this?
Only. Sorry, the question again?
How many team members have access to the cold wallet in order to provide moving from cold to hot in order to facilitate a larger withdrawal?
So I can't give the exact number, but a small number of people has access to that.
A small number, okay. Um, And are there, for unverified accounts, limits on the withdrawals?
No, so KYC is only required for fiat access. So if it's crypto to crypto, no KYC is required.
And no limitations on the amount of withdrawals?
No limitations on deposits and withdrawals.
Okay. And how about the Lightning or Liquid support for deposits and withdrawals? Do you provide either of those?
Liquid we support at the moment. Lightning is currently in the pipeline for development.
Okay, and what about the fiat, on the fiat side of things? Which currencies do you support, and are there any restrictions on the use of the currencies by users?
No restrictions on the currencies. We support 9 currencies at the moment. And the main ones are dollar, euro, pound, yen, Singapore, Hong Kong, Australian, Canada, and AED, dirhams.
And do you rely on one bank, or do you have multiple banks? Because there's been in the past issues with certain exchanges where, especially when it comes to transferring US dollars around, it has to be routed through a US correspondent bank. And sometimes when it's crypto related, there's certain correspondent banks that aren't so friendly. So how's the on and off ramp for fiat in general? And yeah, how many banks are you using to do this?
Well, I can't really say the amount of banks that we are currently working with. We do have a few. They are also dependent on the type of currencies being used. You've pointed out a very good point that most of the banks that most of the corresponding banks tend to be an issue in certain cases. Yeah.
And have you experienced any issues related to that?
Yes, we have.
Have you resolved the issues?
Yes. So we do understand the due processes required by the banks and how important it is to maintain a proper AML policy. So yeah, we are all over. We also have good connections with Signature that gives us access also in the US.
So, which transfer types do you support? Do you support SEPA for euro, faster payments for pound, ACH for USD, or is it only generic wires?
Other than generic wires, we have SEPA support that should be coming in the next few weeks. That's mainly for euro. Nothing on the pound at the moment. We are currently adding more payment gateways globally also, other than just the regular SWIFT and SEPA, as well as support for credit card payments.
Okay, let's talk about the products you guys offer then. Let's start with the spot side of things. Do you offer only spot, or do you also offer margin trading on the spot exchange?
So margin trading isn't available at this time. For spot right now, it's mainly focused on fiat, but we do have a new feature coming up soon. It's all-in-one multi-currency fiat and crypto single order book. The main purpose of that is to basically aggregate all liquidity into one order book.
So how does it work now then? Because when you sign up at BTSE, you have to choose which fiat currency you want to have as your, main settlement currency. Does that mean that for all the 9 fiat currencies you support, you have 9 different order books currently for the different pairs?
No, so it's all one single order book at this point. A user is able to select when they start out what the default currency is. But in the next 2 weeks, we are launching an entire UI refresh, and users will have access to all currencies from the spot interface.
So that means they no longer will have to select the currency when they register.
That is correct.
And so what is your current fee structure on the spot side of things?
Sorry,
for
what?
the current fee structure, the taker maker side of things, how do you structure that on spot products?
Maker, we're at 5 basis points, and taker 10 basis points at the highest level.
And what about the lowest level?
Lowest level, this is also before the implementation of the BTSE token that's to come. Currently, it's 1 basis point and 2.7 basis points.
And so currently, when you are, if someone selected euro as their settlement currency and another guy selected dollar, and they're trading with each other, how do you then perform the conversion between the two currencies?
So this is agnostic to the user, but we basically have treasury functions that are connected via API to actually handle the real-time conversions.
So you have a back office that's doing the conversions and the clearing.
Yes, that is correct.
Okay, now let's jump over to the more interesting side of things, the futures product that you guys offer. Could you first tell us what the general contract specifications are and how that works?
Okay, Brian, do you want to take point on this?
Yeah, sure. So our the futures on BTSE is it's a bit different from most of the other exchanges because fundamentally we have implemented a linear future design. So fundamentally, the underlying settlement currency on our futures is actually US dollar, but we also still offer a multi asset margin system. So you can really pledge any combination of fiat or crypto, such as BTC or stablecoin, as your margin collateral when you trade futures. And then on the P&L side, you can also choose to settle in any major crypto or fiat. So fundamentally, it's a US dollar settle future, but then you can also choose to settle in BTC.
So in other words, you can deposit ETH, Monero, BTC, and USDT, and they all will be able to be used as collateral in a position on any of the contracts.
Yes, that's correct. And we also support cross-wallet function too.
So in terms of how the margin is being isolated or crossed, you have one main wallet which is used to cover all positions in all different pairs, but then you also have the ability to isolate collateral within a certain contract. Is that correct?
Yes, exactly. That's correct.
Okay, and so when a user's trading these different contracts, they're earning US dollars as their P&L, but they can choose to settle it in any of the major cryptos, not just the base or quote currency, but any asset that you're offering.
Yep, that's correct. So when at the point where the user realizes his P&L, we'll take the prevailing rate for the crypto that he chooses to settle in, and then convert that US dollar P&L into the crypto that he wants.
And what's the mechanics of this conversion? Is this performed on the spot market where the volume is public, or is there back office operations that aren't public that perform this?
This happens on the back office.
Okay, it's interesting. Why don't you just route it on the spot exchange and then you'll generate volume there as well?
That's also one of the possibility. It just depends on the inventory level that we have on the back office. Sometimes perhaps we have some extra inventory that we can also use this to just offload the inventory too.
Right. Okay. So what are the fee structures on futures?
So right now the basic fee structure is for maker is -1 and then taker is 6 basis points.
And that's regardless of volume?
Correct. Currently, it is regardless of volume, but with the BTSE token coming up, we will introduce a volume-based program that's a function of volume and also a function of the BTSE token holding that would dictate the actual fee level for the user.
Okay, yeah, well, we'll talk about the token a bit later, but so which order types do you guys offer? Do you have stop loss, take profit, post only, reduce only, hidden orders, OCO, etc.?
We support most of the major order types, so limit, market, OCO order. We also support trigger orders, trigger take profit and trigger stop loss. We also support a special order type that's unique to BTSE. It's what we call an index order type, which is basically you can float a buy or sell order at some percentage point above or below the market.
Okay, and what about algorithmic orders? A lot of people like to use Bitfinex's Honeybee's algo structure, where they can sort of perform their own. They can create their own sort of order types. Is there any plan for doing that?
Yeah, that's also very interesting to us, and so we are also looking into something like that too.
And what are the margin requirements on the futures contracts? Do they vary by the pairs, and do they vary by the size of the position? Are there position limits?
Yeah, so it's fairly standard. It depends on the market. So, for example, our Bitcoin markets, including the perpetual and also the regular futures, it's the typical. The baseline is 1% initial margin and 0.5% maintenance margin. But it's also a function of your position limits too. So the higher your requested position limit is, then the higher your maintenance and initial margin percentages are going to be. But also it varies by market. So ETH, Litecoin, and other markets would have a higher initial and maintenance margin percentages.
Okay, so but what is the maximum position size?
For Bitcoin, it's 1 million contract. So it's because it's a linear contract. So one contract represents 0.001 BTC. So 1 million contract means it's 1,000 BTC position.
Right. This is an important distinction that traders need to be aware of. This is not like BitMEX, where the contract is $1. The P&L is the same in terms of it's paying out and standardizing in dollars, but the contract specifications are that it's actually Bitcoin value, not USD. So again, about leverage and about isolated margin versus portfolio or cross margin, you offer the ability to use one wallet that you put collateral in that covers all positions in any pair, but you can also isolate the margin into a specific pair. Is that correct?
Yes, that's correct.
All right, and what about sub accounts? Do you offer the ability for users to have sub accounts where there's like a master account that can manage sub accounts?
This is something that's we already have planned for, so it's in the development pipeline. So hopefully we'll get it maybe in Q1, Q2.
And okay, and API wise, you mentioned that there's co-location, but what are the current rate limits that you have on the REST and WebSocket?
John, you want this question?
Yeah, the current rate limits we're doing about 150 requests per second. Yeah.
Okay, and let's talk about the risk management model that you guys use. So 1% initial margin and 0.5% maintenance margin. This is a pretty high leverage offering that you have. How do you manage the counterparty risk? Do you have an insurance fund? Do you use auto deleveraging where you kick out a defaulted party and the counterparty to this? And how do you? What is your model for ADL if you do have this?
So because we accept multi-asset collateral system, so in real time we basically mark the US dollar value of your collateral to a US dollar. That's how we calculate whether or not you have breached the maintenance margin requirement. And when that happens, a couple of things could happen. The first thing is we will try to cancel your outstanding orders. That would free up some of the margin for to support your position. If that still doesn't work and your position basically needs to be liquidated, then the first step is we'll try to liquidate on market in the order book. If that fails, then we'll dip into the insurance fund, use the insurance fund money to improve and make the order more aggressive to a certain point. And I believe that's 1%. If it goes beyond a 1% slippage, then that's when we would go into the ADL mode.
So do you do a total liquidation once they're breached and the orders are cleared, or do you do partial liquidation until they're solvent and then let them keep part of the position open?
Right now it's total liquidation.
And how is this insurance fund funded? And are you transparent about the amount in the insurance fund currently?
Yes, we do have a page that lists the insurance fund size. So the insurance fund is basically funded whenever there's a liquidation. Then we would collect the maintenance margin and put it into the insurance fund.
And what logic are you using algorithmically to determine which collateral gets liquidated in terms of? I mean, I guess if you do a total liquidation, then all of it just gets wiped away. So there's no order of operations in terms of, Bitcoin first, then ETH, quality of assets. So I guess that's not relevant, or?
Yeah, so that's correct. So basically, when the maintenance margin is breached, because it's total liquidation, then by right, then the user equity actually goes to zero. So it's it wipes the entire wallet.
And for the ADL, what is the logic or model that you're using to determine which counterparty gets kicked out of position along with the defaulted trader?
It's pretty standard. So we will look at, on the long side and the short side, we basically rank all of the positions, and that's based on a combination of the P&L in percentage terms and also in terms of the leverage of the position. So the basic idea is really we try to ADL positions that are highly levered or positions that are very much in the money.
Okay, let's talk about liquidity. Market making wise, how much of the liquidity is provided in-house by you guys, and how much is provided by external actors, and what sort of incentives or market making programs do you have to incentivize liquidity from outside?
So most of the market making currently on the platform is all externalized. We do offer tailored programs for ones who are interested and want to subscribe to the market making program.
Could you describe the market making program and what sort of incentives you offer?
It really depends. So when we speak, the guys who come to us usually, it depends on the strategies that they have. Some of the prop trading desks, if basically they're more maker, we do apply some targets and basically some fee structures that have to be achieved by hitting those targets.
Okay, and can you give us a rough idea of how many external liquidity providers you have?
Right now we have about 5 liquidity providers. This is excluding the guys who just come in and still take advantage of the maker rebate.
Right, but you do have an in-house market maker just to provide backstop liquidity, is that correct?
No, we actually externalize that. So we work closely with one of our partners who we've known for quite a while.
Okay, that's interesting because most of the shops that we've talked to, especially in the beginning, they provide it in-house to ensure that they are not in a situation where the books are empty and everything. So you liquidate based on a mark price, is that correct? And what is this mark price formula?
Yeah, Brian, go ahead.
So the mark price basically is it's a fairly simple weighted average of an external spot index price plus um, plus some basis that would represent what the market is on BTSE.
So what prevents the market makers who are dominating the books from manipulating the mark price? One user in the text chat mentioned that there was last October an event where there was a massive wick that was totally disconnected from the market, and how would this affect the mark price, and would users get liquidated unjustly because of it?
So I think there are two parts to this question. So the first part is why, how do we protect the user if there are some dominant traders on the platform. So the first thing is for this mark price, fundamentally it really moves more in line with the spot index price. So the spot index price on BTSE, we are referencing right now, I believe it's 6 reference spot exchanges that are providing that reference spot price, at least for BTC USD. So the second part of this is the issue, I think a couple months ago. So that actually, when we analyzed it, that was the day when the Coinbase feed supplied some very erroneous data. And they were on the same day. It caused some issues on other exchanges as well. But based on after that day, we have implemented a change where we used to only have 2 reference spot pricing when we look at spot exchange pricing, and then we increased that to 6. So by right, then the new mechanism should be much more stable. And then out of this 6 exchange, we actually drop the highest and the lowest outliers in real time.
Yeah, I think in general it's good to filter out that data that comes in, and if there's a massive jump that is inexplicable, it should just be discarded. So this leads me to a sort of puzzle that I've been wrestling with while looking at your exchange versus others. If you look at the fixed maturity contracts, so not the perpetuals, but the March and June contracts, they're really underpriced compared to FTX, Deribit, BitMEX, who offer the same contracts. Is there any explanation for why you guys are trading $200, $400 below those other exchanges for the March and June contracts respectively?
We find that pretty interesting too. But ultimately, I think the market drives the price. So maybe for some reason, there is a bit more selling pressure on our exchange compared to other exchanges. But I was also say this might be an interesting opportunity to go long the BTC contract and then short the June contract on other exchanges. Seems like a pretty low risk trade.
Yeah, so that's the thing. I mean, is it a low risk trade? How big is your insurance fund? Because I think the issue that I can imagine there, and I've analyzed this quite a bit. The only issue I can think of that could come up is that the counterparty risk is higher on BTC. So if I'm putting the trade on FTX, and I short FTX and I long on BTC and capture that $400 spread on the June contract, for example, or $200 spread on the March contract, then I might get ADL'd more likely on BTC than I would on FTX. And this is all dependent upon the insurance fund size, which protects the user from ADL, and the liquidity. So is there somehow higher counterparty risk on BTC that would be explaining this?
I think also one thing to point out, I do believe the basis changes over time. So right now it does look like it's a bit low, but possible it might go up as time goes on. I think it really depends on the demand and supply. Maybe John, you can provide some color on the insurance fund side.
Yeah, if I recall correctly, the insurance fund is about $1.8 million worth right now.
And this is for all the positions, right? So what's the logic for how much of that insurance fund goes towards, say, Monero dollar futures versus Bitcoin dollar futures?
Right now, there is no separation. The insurance fund is used in the interest of protecting all trades on the platform. So it's just it's shared globally.
So it could get wiped out by the. I've been trading a bit on the Monero futures, and so you're saying that technically it could a big move on Monero could wipe out the insurance fund, and then Bitcoin traders who are arbing the spread then are more likely to get auto deleveraged.
Yes, but as basically as what Brian mentioned earlier, there's still a limited amount of how much the insurance fund would cover, right?
Okay. Let's move on to the token raise that you guys are planning. Can you tell us a bit about how much you're planning to raise, who the raise is available to, any kind of KYC restrictions you have on it, and most exchanges, they use Ethereum to run it, but you are using Liquid. So can you talk a bit about this?
Yeah, so the raise is currently private. We are targeting to raise 50 million. At this stage, most of the if you're familiar with, there is an immediately available tradable allocation, and that's been already taken up. That's been all sold off. The allocation is for 5 million. We have had some prominent names in there who have actually invested in this. Some names include Galaxy Digital, FBG, CMS Holdings, Lemniscap, Therion Capital, quite a few. So we are considering to do a public sale first in March. Basically, that would be only when private sale ends, which is end of this month. As for KYC, KYC is definitely required for all participants. US is basically off the table, but that's pretty much about it. For individual jurisdictions, we have separate requirements that are basically detailed in the agreement.
Okay, and why did you guys choose to use Liquid to run the token on? Peter Veal, who is head developer of Bitcoin Core, has said that the Liquid tokens don't get the security of Bitcoin. They actually rely on just the security of the Liquid network itself. So what are the pros and cons of using Liquid to run the token versus some other platform?
Yeah, well, in my opinion, the security model of Liquid, although it's different to Bitcoin, it doesn't necessarily mean it's insecure or not as secure. If you compare it to Ethereum, the ERC-20 contracts, right? Where it's different is that for Liquid, it relies on Bitcoin's cryptography and the Bitcoin script. So you don't have that issue with weird contract languages or unknown edge cases or potential attack surfaces. Well, in the past, Ethereum has had quite a few incidents in regards to insecure or contracting language. And one thing that we like about Liquid is the support for confidential transactions and assets, and that's also a plus, right? So essentially, the block signer doesn't know what is actually signing. So it basically allows for the token type and the amount to be blinded.
Okay, and what's the incentive structure for the token? Like, where's the value being derived? Binance and FTX have tokens that where they offer all kinds of different incentives to buy and burn and this and that. What is the way that you are restricting supply and increasing demand in order to drive value into the token?
Right. So what we see, the token is key to the development of the future of BTSE's ecosystem. The ecosystem covers not just the exchange, but actually a suite of services that we plan to introduce over time. So, sorry, 1 second. So your question on what the incentives are, basically we start off with a buyback.
A buyback? How?
Excuse me, sorry. We have a buyback that we would use a portion of revenues to constantly buy back and burn tokens until half the supply is basically cut off. The other uses of the token involves it being used as collateral that you can trade in spot and futures markets, fee discounts, potential staking capabilities. More importantly, also token holders would have access to special programs like the Pro Trader program that we plan to introduce, access to some selective campaigns, payment for services that would include, say, listings, co-location, enhanced data feeds, advanced trading functions, as well as higher limits. We plan down the road, we plan to introduce a debit card. So this is where you could get higher limits on your debit card. You could get rebates. You also enjoy higher referral bonus. Yeah. So in the coming weeks, we will be releasing more information on the site about the benefits of the token.
Okay, and so you mentioned referring users. You have a referral program. Like, can you talk about some of the bonus programs you offer for promoting the exchange and the deposit bonus, trading competitions, stuff like that?
Yeah, Brian, do you want to take this?
Yeah, so let me start with the referral program. So the referral program that we have, I think, is quite unique to BTSE. So we have an unlimited level in the referral program. So basically, you can earn 20% of the people that you refer, but you also earn 10% of the people that they refer down the line. So yeah, so that's basically our referral program. And people that you refer, they get also a 20% off the trading fee for 30 days.
So it's a multi-level referral program.
Exactly.
And what about these other bonus? Like, you have deposit bonus, and you get bonuses for tweeting about it and stuff like that. Can you talk about these extras?
Yeah, so we have a retweet bonus for our new users. So if you tweet one of the links that on the BTSE Twitter profile, then you get a $10 trading capital that you can use to trade. We also have a couple other bonus that are listed on the website in the checklist. And then this is something that we are constantly also adding additional bonus into this list and to make it more attractive for the users. On the trading competition part, we did a trading competition back in November when we launched the main coin index future market with Brave New Coin. And then we will have another trading competition coming up sometime in this month. And then we'll have furthermore trading competitions coming up later.
Okay, cool. So finally, my last set of questions regards your plans for the future. Do you plan on adding for example, the margin market for the spot exchange with maybe peer-to-peer lending or options contracts or other exotic derivatives like index futures or CFDs or anything like that?
Yeah, I think on the. Go ahead, John.
Yes. So currently in the pipeline, we have a couple more interesting things. We have an alt index with Brave New Coin that's coming up. We're looking to introduce more alts to the spot and derivatives market over the next quarter. We are also looking to add crypto-backed trading CFDs. That's something that we hope to be able to deliver first half of this year, as well as a debit card that can be funded in both crypto and fiat.
Sounds good, especially the CFD side of things. I think it would be interesting to have a place where you can trade all the other, like, currencies using crypto and maybe even S&P and stuff like that. So Flipper, you want to ask the couple of questions you had, and then we'll open up to everybody else? Or should I ask them for? Okay, mic disabled. So Flipper is asking that he keeps hearing about this one combined order book with any asset as collateral, which is unique amongst most exchanges. Well, FTX offers multiple collateral as well. I think that's the only other place. Which is, he says, this is interesting. Can you explain in basic terms with respect to risk management and liquidity how this works?
So the assets that we hold as collateral, the first thing that I would describe is the haircuts. That's actually where it's slightly different from FTX. So we mark our assets in real time to the market, and we apply a tiered haircut. So, for example, let's say your position is in BTC. We would apply for your first 30 BTC, we would apply a 0.1% haircut. And for the next 60 BTC, we would apply 0.15%. If I recall correctly, I think the haircut on FTX is what, 5% maybe? So, and we basically tier it. So this basically allows users to really maximize the value of their collateral. And as for the liquidity, we are plugged into quite a few larger OTC desks where we're then able to do real-time asset liquidation as needed.
So there was a question on YouTube from G. Lucker. He was asking, are you doing any market making on the exchange? You've mentioned that you have back office operations that handle the collateral and risk management, but are you above and beyond that? Are you doing any market making whatsoever on the exchange yourself?
No, we do not do any market making on the platform. That is all externalized.
Okay, and Flipper asks, and this is nothing personal against Samsung, but he's saying he sees a lot of shilling from Samsung Mao at Blockstream. He's saying, is he an advisor, an investor, a paid shill? What is the connection between Samsung and Blockstream and BTSE? And are there other paid influencers or anything like that?
No, Samsung is not a paid influencer for us. We started out when we met Samsung, it was at MCF, and I believe that Samsung is just genuinely interested in what BTSE is able to deliver and what BTSE is about.
Okay, I'll change the talk power so that the guys who have above 50 and can normally speak will be able to ask their questions. Please do it in an organized manner and don't be a fucking troll. Okay, so it's open now to those who have talk power above 50. Ask anything. Please don't repeat any of the questions that have already been asked. If you have something novel to add, please jump in now.
I just enabled my mic here. I just want to say thanks for coming on, guys. You both spoke really well and very informative, and really appreciate that.
Thanks. We're happy to be here and happy to share more with you guys on the platform.
Thank you very much.
Thanks a lot.
So no additional questions? Did I cover everything or what? I suppose there's no additional questions. Thanks for coming on, guys, and being open about all the answers to different questions. It seems like a very promising project you guys are involved in. It's nice to see Liquid getting a bit of attention in terms of allowing the deposits and withdrawals on Liquid and running the token on Liquid. There's one question that actually I forgot to ask regarding the token. Are you guys confident that it wouldn't be regarded as a security and it would be passing the Howey test?
Yes, we've just got legal opinion for a utility token.
Okay, cool. Sounds good. Okay, there's one question. Your opinion on decentralized exchanges. I mean, obviously you guys are crypto guys who value decentralization and everything that comes along with it. What do you think about decentralized exchanges and whether this is going to damage your ability to compete in the future?
I think decentralized exchanges, they serve an entire different crowd and they serve a different purpose of what we're trying to achieve here. What we're trying to build in this space is actually a suite of services that we're able to bring cryptocurrencies into the traditional finance markets that most or financial services that most people are used to having, right? So it serves a different area, and I do think that there's no reason that the two can't work harmoniously and be synergistic.
And are you going to be trading? Are you going to be allowing people to trade STOs, security token offerings? There's a lot of people talking about that.
No plans at this point, as it's under a separate regulatory framework. From time to time, we will be reviewing what makes the most sense, and then we'll take it from there.
What about the Bcash and the Bcash Satoshi Vision? Are you going to allow people to short these on futures, or you don't want to support them?
Unlikely for now, but as an exchange, we tend to remain unbiased. But at this point, we have no plans for that.
And what is what sort of criteria do you use for what assets would be added and which would not be added? So Monero's on there, but EOS isn't, for example. Tron isn't. What criteria do you use for which pairs would be added to either the spot or futures side of things?
So it comes down to the demand, the community, partnerships. We do factor in quite a few things. A lot of so as I mentioned earlier, we plan to introduce more alts, which you guys will be seeing over the next quarter. It's just that prior to all of this, we've been very backed up, ensuring the platform is it's very reliable, it's secure, it has all the most critical functions there before we look to focus on listing more alts.
Okay, cool. I think that covers everything. I don't think there's any more questions. So it's been a good hour. Thanks for coming on and being transparent and interacting with the trading community. There's a lot of exchanges out there that don't have the balls to come out and actually have unscripted, direct questions being fired. So it's we greatly appreciate you guys coming on and wish you the best with the project and the token raise, and hope that you guys make a bigger and bigger dent in the market share of the growing derivatives market in crypto.
Appreciate it. You've been a great host. Thanks to you guys for arranging this. Thanks Swapman. Thanks Flipper. Thanks everyone. Look forward to catching up again sometime. Cheers, guys.
Thanks a lot, guys. That's been a lot of fun.
All right, that's it. That's BTSE, the spot and futures exchange co-founders Brian and Johnny, and that's the end of this discussion. Thanks for everyone that came to listen on YouTube and on TeamSpeak and contributing different questions. And we'll see you next time. Thanks.